Hi everyone. Okay, I believe you guys can hear me. Should we just wait for a little 2 minutes? Okay, for everyone to tune in, and then we'll start the session shortly. Okay. Okay, shall we start? Welcome everyone. So today, I'm going to talk about advanced goal training strategy. So basically, just want to share with you guys what strategy that I personally trade. Okay, if you have any question, okay, you can just send in the question in the chat box below here. All right. Okay, so before I start the webinars, disclaimer. Okay, this is marketing communication and does not contain and should not be construed as containing it investment advice or an investment recommendation. If you want to trade, please do your own due diligence before you guide trade. All right, and I want to highlight risk warning over here. Trading forex and CFD may carry significant risk to your capital and it may not suitable for all investors. So please come join the webinar and learn together. Okay. The agenda for today. Okay, I'm going to cover what is gold trading strategy, indicator used in the gold trading strategy, combining those indicator, entry rules and exit rules. Okay. And the speaker for today, my name is Peggy. I'm an investment analyst and a prop trader as well. So if you guys want to know the prop firm, so basically that is challenge like two phase. Okay, phase one that you need to hit the target of 8% or 10% depending on the prop firm, and the phase two you need to hit the target of 5%, which is they have like maximum daily drawdown like 5%. Okay, and then if you pass, they will give you the fund for you to manage or to trade. I think they have a maximum up to 400k. Okay, capital. Hi, welcome everyone. Like I just mentioned, so today basically I just want to talk all about gold. Okay, because I personally trade gold as well. I trade on either M15, M5. So if you have any question how I trade gold, you can just ask me. Okay, so to me, when you want to trade gold or XAUSD, the key factor that you need to know, which is a fundamental. Okay, like if there is a new for inflation rate, which is the between inflation and gold prices, as gold is often seen as a hedge against the rising prices. Okay, and you need to take note of the interest rate as well. Okay, and geopolitical tension, so you need to take note of all those major news. Okay, so basically if you were to look at the Forex Factory, which is the only website I personally use for check the high impact news, which is we already know that for those entire week, which is this week, there is a high impact news which it will be affecting gold, which is a non-farm payroll, which is Friday. Okay, these are time zone you can just check according to where you live, which is this should be the UTC. Okay, and okay, let's just look at the calendar. Tonight, so 2 p.m. you need to know of that you will see the movement of gold versus the dollar index, and Wednesday gonna be another ADP. Okay, 12:15 p.m. and another one is 1:45 p.m. and 2 p.m. and 6 p.m. So this is a high impact news for entire week will be affecting gold. Okay, so basically if you trade gold, you should already know how to look at dollar index. okay, which is I will just bring you guys for a while to look at the correlation with dollar index versus the gold. Okay, let me just change what we can see here. Okay, so there is a negative correlation with dollar index and gold, right? If you were to look at the chart over here, based on, I just go to head for time frame, what you see here, when gold is rising, okay, but there is certain time that they have a positive correlation, but about 90 to 95% they have a negative correlation. Okay, meaning that when gold is rising, like up to, okay, when gold is maybe up to here, okay, when gold is rising, which is 24th of July, dollar will be falling. That's why they have a negative correlation with dollar and gold, meaning that if you were to trade news, okay, you were to trade news here, I mean over here, okay, these are falling. If you were to look at the calendar, so if you want to trade news during the data release based on the forex factory, but there was a lot of trader, they are using investing.com, okay, to look at the news. So it's up to you guys, you just pick either one or two, but to me I just stick to one website. Okay, so basically you should already know that if the data are released for the US dollar, if there's a red number here, meaning that dollar will be falling, and then you can buy gold. Okay, but again, if you trade during the new release, that will be really high volatile. Okay, hey, hi guys, where are you tuning in from? Okay, I have a question. When we use the Fibonacci in XUSD and in the BTC, huh? Okay, your question is, I have a question, when we use the Fibonacci in XUSD and the BTC. Hey AJ, nice to see you here. Okay, I can, yes, you can use Fibonacci as well. Okay, I will go to indicator later when you want to trade with indicator on AUSD, because I heavily using Fibonacci on gold as well. So again, if you want to say that you want to trade gold, and then you say that you're more to technical analysis, but to me you need to look at a high impact news as well if you are trade gold. Okay, because we really need gold, that gold is just, you cannot just don't bother about those fundamental for gold. You need to, okay, and not you need to, you have to, okay, those is news that you need to take note of. And the technical analysis for gold trading, don't need to get into very complicated, those like very advanced technique. The key, like the basic one, the chart pattern, you should know that, identify the chart pattern like head and shoulder, double top, double bottom, trend line, all this you should know. For gold, if you were to look at a chart, gold will be showing to the price action. That is the chart pattern, or those are price action you need to know. And those indicator, okay, you should know, which is moving averages, RSI and MACD, but I personally don't use MACD. I use RSI and stochastic, but I heavily use RSI to identify the divergence, which I will just show you guys later. Okay, but this is indicator you can use to trade or to help you to generate buy and sell signal or confirm a trading decision. I use moving averages, which is if go below moving average EMA 200, you need to buy and sell. Okay, which I will show you guys as well. And those advanced technique, either you want to go to the SMC or you go ICT, is up to you. But again, those ICT and SMC, they require two time frame, which is higher time frame, which head 4, and then you execute your trade based on M15. What I mean by that, let's just look at our chart here. Where is my where is my where is my chart just now? Okay, this is okay. Let me show you guys. So basically we already know that gold has negative correlation with dollar index, meaning that if you want to trade both of them together, first you need to see that if, okay, let me dollar and gold, I just, what you can see here, okay, if you want to highlight the key level, for example, you know that somehow gold is at your key resistance level, which is somewhere around here, which is they are kind of rising, and you can see that dollar is falling because they have a negative correlation. This is not the zone that I'm looking for. Okay, for dollar there will be slightly more room for dollar to reach the resistance level. So this is my resistance. Okay, either I move up here, this is my resistance as well. Okay, gold is reaching the resistance, but dollar is falling to my support level. You can see there has a negative. This is rising, this is falling. Okay, so meaning that to me, if you want to short gold, you need to you need to see if you want to short now, you can, because gold is approaching your support level, meaning that to me gold should bounce from that, and then I mean dollar will be bounce and gold will be kind of falling here, based on either you trade based on this your resistance level. Actually this is my sell zone. My sell zone is at about 23.90. This is my sell zone, okay, for gold based on H1. Okay, meaning that I short here, this gonna bounce because they have negative correlation, and I use the I side. Okay, I just maybe change to like this side. I go to gold here, dollar here. So again, okay, if you want to trade during the news release, right, you should look for the higher somewhere, which is H4 or H1 for the key resistance. Don't trade based on the like M15 or M30 or even like M5 when you want to trade during the New York section, because there is a lot of volatile there. Okay, so basically let me just go to gold. Okay, the indicator that I'm using, eyesight and stochastic. Okay, if you trade gold based on whatever we can see here, we will get the entry. There is a divergence versus the eyesight. Okay, I keep things very simple because I don't want to like trade with so many indicators, but with one, you highlight the key level. Second one, you see when price approach the key level, you will see the divergence either in M5, M15 or H4. Okay, and now I see the divergence here versus the I side. This is the, you can see that they also tell you that one price at, oh, not sorry, I'm the wrong one. Okay, go back to where I see the divergence again. Okay, this is the price action based on H4 time frame. You just see here your price action here. Okay, I just zoom to see. I will get back to you on the Fibo. Okay, this is based on H4. You can see the price action where your price action here, rejection, your price action right here. Okay, able to see here, you will get another entry. If you short here, price pull back, your entry, or your rejection, you another short entry right here. You go to the M15 if you like to see the, like over here, what you can see over here based on whatever we can see, there is a divergence versus the I side, right? You can see that either you see the price make equal high, they also break market strategy based on this level. Yeah, okay, these are market strategy, or SMC they just call chain of character. Okay, it's up to you guys, but actually whenever they break below the low here, create a new low, you wait for pullback, you will get an entry here. But over here where you can see, you trade with RSI, you will see price make a higher high and indicator is make a lower high. Okay, you can double click to see it bigger. You will see that somehow if RSI slightly go above 70, like 70, somewhere around that, you should keep a look out that the price is approaching the key resistance already. Okay, somehow here. And what you can see, your my stochastic, I'm using 2133. Okay, so stochastic, it depends on you guys, so you can judge. Some of the trader, they are using number like 533. Okay, I'm used like 2133. It's up to you, so you can just change the setting according to your trader, depending on your trading style. Okay, but for the RSI, I'm using the 14, which is the default number. Okay, go back to here. When price approaching our key level, which is this our ego high, or you may consider the resistance level based on here. Okay, this is all-time high. You can see that one price go back, like go back down, create the low, go up again, kind of like create the bearish divergence here, and then they break below this low here, right? They break below here, they create the new low here. Now you can use Fibonacci like to pull from your swing high to swing low here. Your Fibo, you need to pull from your left to your right. Okay, the Fibonacci retracement, this is the level for the retracement, like 78.6, 61.8, 50%, 38.2, 23.6%. And what you can see here, price is go and somehow is retraced at 61.8%, which is here. Then you can see that. So one price pull here, you will get another short entry right here. And if you were to go to H4, what you can see here, well, entry, this how its H4 look like, right? If you execute the trade based on M15, you will get the entry here, and then you go to the higher time frame, which is H4. You can see that H4 ending with the price action. This very lovely price action, and this is our sell entry. Okay, either you consider this like you break the low here, and these are H4 time frame break. Okay, imbalance here, break above the low, you wait for price to pull back at a certain, at least 50%, 78.6 to 50%, you get another short entry here, and then you hold. Okay, and another issue, you can use Ichimoku cloud to see why my Ichimoku cloud like that. Actually I don't use Ichimoku cloud to trade go, so but if price go below the Ichimoku cloud, just buy a short, right? But I personally don't use it. But if I trade currency, I will use, but I will use EMA. Okay, EMA, there will be 2 EMA, meaning that if price go below EMA 200, you need to buy at below, you need to buy at sell. If they go above EMA 200, you need to buy at buy, or you hold the buy position. Okay, let me show you guys. For example, I just don't use, or like over here, based on H4 time frame. Okay, EMA 200. Okay, they are acting at resistance or support. In this case, you can see that one price break below. Okay, one price break below here, EMA 200, they are pull back. Now they are acting at the resistance level. You need to short. Okay, why we short at this level? Somehow this is our resistance level. Okay, you can see that you to short here. Okay, and price go all the way up and go back again. This is our kind of resistance level, like here, you know. No, like you to short here based on EMA 200, pull back, price like went down and then go back up again. This is our resistance level in really close to EMA 200, and then you can see this candle, they close below resistance level, they close below EMA 200. You need to buy at short. Okay, one, you know, one price kind of like, you know, go I mean EMA across the candle, you know that sideways we're not gonna trade. In this case, you need to wait for price to go above EMA, which is in this case they close above, and then now they pull back. You need to buy based on this candle, like here. Okay, you buy and then you hold. Okay, and of course you need to know how to look at market structure, because here support level. Okay, you can use eyesight and stochastic to see, which is one, they are create the equal low here based on head 4 time frame, right? Your eyesight is already below 30. Somewhere is either you will say like over so here, and my stochastic also at hidden, somehow is hidden support like here. Okay, so there you can see it's good to go. And what you can see that you buy from here, you identify this your support level, and what you can see your price action right here. So if you don't trade with price action, actually go is very good with the price action. You go back and refer, or you try to look back. Okay, one price come or approaching or at the key support, key resistance, you will see that there is a price action. You go to the lower time frame, you will see the confirmation, either like the divergence, and then you can see the eyesight is already over, but also and stochastic as well, this confirmation, and then either you buy or short from there. For example, I will show you guys again another divergence here. Okay, divergence could happen at H1 or H4. At least if it happen in H4, you need to hold at least 100 pip. Okay, 100 pip. If the divergence happen in either M5, M15, at least you need to hold for at least 50 pip. Okay, but it need to happen at the key resistance or support. For example, here I see the divergence here based on H1 time frame, and this is our support level, right? This is our support level, this is the key support level. You see what you see here, there's a bullet divergence versus the eyesight. Okay, and then you can see this over so. Okay, price make a lower low, indicator is make a higher low. Okay, and what you can see here, our stochastic also at support level, and this is you can buy up and then you hold. I told you you need to hold at least 100 pip, and then you can see all the way up there, and it hit EMA 100 and then it's falling, because now they are acting at the resistance, and somehow this is also the resistance level as well. Okay, you can see the confirmation we have like 3, 1, 2, 3. Okay, like you know, at the support level you can see that is also divergence here. What about if you were to go to M15? What you can see in M15, if price come here, you go to M15, you'll see the price action. You can see the price action here. You can see this is the price action, and M15 will tell you that they cannot go below. There's a price action over here. That's a wick, and the body. You see that the body cannot close below. Okay, and your price action really nicely over here. When the candle finish the H1 time frame, you will see the divergence, and then we will buy from that level, which is here. That's why a lot of people they are buy at 23.52 or 53. Okay, which is this one, because there's a divergence here. Okay, like I say, if you trade gold, actually if you look at gold like every day, like I myself, you'll see that there's a lot of divergence for you to trade. Okay, and if you know how to identify the key level, this is the only indicator that I'm used. Okay, I don't like draw so many lines there, because it's like it's make my chart look messy. Okay, now based on H1 time frame, Okay, you will see that this is your somehow is, if you were to identify this is your support level. Okay, if you buy here you might get spike up like over here, but in this case you should know how to use Fibonacci, right? You can just filter here. You know that price create the high and create the low here. Okay, so you can use Fibonacci, pull from your left to your right. Our golden level, this is the one 61.8, right? You can see the price come to 61.8 and then bounce from that level and go to resistance level now. You can see that you want to buy from here, either you want to put the TP like 100 pip, or you can do tailing stop loss to keep like, you know, moving up when the market move up and until up to here, and you can see the price go back up to very nicely like overlap support resistance. You can use Fibonacci as well. You can see that they stop at 61.8%. this is our golden level. You can see that 61.8%, meaning that if you were to draw from this swing high to swing low, we expected the price will go and fall, right? That's why price go to this level, which is 24.02. okay, and then you can see the rejection here. What about if you want to go to the lower time frame? You see that this is the zone. You go to M15. I think there might be the divergence, but it's not very clear, but they make an equal high. I go to M5. You can see that when price go to the key level, okay, you can see the rejection is very clearly based on M5. rejection go back up again. You can see that the body is closed below. Okay, so you know that price already on downtrend, you know that price cannot break above. And then here another resistance level, right? Either you want to trade based on M5 if you know how to trade swing high, swing low here. Okay, price cannot go above here, so you're gonna buy at short or sell. And in this case, you should just go up to 50% here. Okay, you can see that either you say that okay, this might be equal high or M pattern. Okay, then price pull back to the neckline here. Okay, somehow is close to our 50% fib level. This is my 50% fib level, like here. Then you're gonna short. When price come to, either you identify your resistance level based on M5. You can see that the rejection, a lot of rejection here. Okay, and then you can see that the body all cannot close above my yellow box, and then you can short. Either you want to short scalping in M5, you will see you short here. Where is your TP? Of course, you're gonna get close your TP based on the body, which is you were to short here. This is gonna be your TP at the body, not the wick. Most of the time for gold, they will just come like, you know, to the body for your TP. Okay, if you were to put at the wick here, if you were to short at this entry, if you were to sell here, for example, like you sell here, okay, price will come, okay, here, okay, if we hit the TP based on the body. And if you were to put at the wick here, because we don't know whether price will come, right? Because gold is volatile, and then from here it's bounce, and then your entry is right here, and then you will see the, oh, if you put the TP here, for example, you might earn like $100, for example, and then price bounce up here, you might get panic. Either it hit your break even or hit your trading stop loss. Okay, from your $100 it become maybe $20, and then after that they continue to fall. But because now we see the charts already, but you want to check in the real market, right? We don't know whether price will just go here or gonna to go up or go down. Okay, so every time you want to put the TP, you need to put at the body on the particular time frame that you trade. If you want to execute on M5, then you should put your TP at the body. If let's say you sell at 23.95, price come to 23, let's just say 90, that is about 50 pip. That is good for scalping in M5, right? and even though price come to the wick and then even go below, and then after that you kind of like bounce up again. Okay, so try not to get in and out very often. You should just either you make target or you happy with the profit, then to be end of the day. Okay, do you have any question for gold? Okay, I will show you again. Now let's look here. Either you want to go to H1 or you want to go to H4. Whenever, like I said, they make it go high here. Okay, you look at your eyesight overbought, right? You can look at your stochastic at your resistance level here. Okay, and then you know that here either you trade with like bearish or the block or whatever you say, actually the same pattern, heavily on price action. Okay, price come back, go down, break this low, pull back, H1 price action here. This is your bearish or the block. Either what some people just say supply zone. It's up to you guys, but actually it's just the same meaning. You can see then price is falling, okay, and then continue to fall, and then they create the high, lower low, lower high, lower low, lower high, and continue. Okay, the H1, and then where you're going to either base here, you look at the eyesight, okay, and you identify this is your TP and your support level here, and price break below, somehow pull back, now it become the resistance. Okay, what you can see here, the low higher TP, we didn't know that price will order before, right? So you need to know that where is your TP. If I to put this my TP based on H1 time frame, okay, and then you can see price is already here oversold, okay, and this already somehow at the support level. You need to either you exit your position, because this could be your support level, first support, and this could be your another support level here. That's why price come, there's a divergence, you need to already take note of that already, that price is going to revert from here. Even though in the swing, if you're a swing trader, even though price will just you short from here, you're not going to close, but price pull back and then continue. Okay, to me, I just day trade up to here. I will buy up and then I may sell again. Okay, either you just want to hold it here, up to you. Okay, can we use any indicator from resistance and support? Which is the best? I don't have the indicator for support and resistance. Usually I just draw myself. You need to know how to identify the key support and key resistance based on either up to H1 or H4, but you need to know how to identify the key level correctly. That's a basic for the forex. You need to know, because if you I don't know whether there is an indicator for support and resistance. Okay, but okay, if you want to identify the key level, you look for the higher time frame H1 or H4, because if you go to M5, if you still new in the forex market, you go to M5, M15, there's a lot of noise over here, so you may not really know how to identify the key level. Okay, you identify the key level, you go to H4 or H1, and then we will see, like we will wait for the confirmation, meaning that if price come to our key level, okay, what is happening or what is happening in lower time frame based on here. For example, this is my resistance level. For example, I might identify this is another resistance level, and this is my support level, because a lot of big rejection here. Either you say that this is your second support, first support, and what if price break below, you need to know this is your either second support here, first support, second support, and over here we already have a high, we already have a low here. You can use Fibonacci, because price on downtrend, what you can see here, that price is trigger where I will show you 61.8 even though let's say I put here for my either first resistance, but then I will use Fibonacci, I'll just leave like that, meaning that okay, that is 50%, but if price go up here, where is the next level? Okay, I might monitor 61.8, so meaning if I were to sell here and price go all the way up, okay, my second plan, okay, gonna be here another sell entry. I go to M15. I want to see whether from price go up to like this 20 like 2402, which is this level, what I see. And then I go to M15, I see that oh, okay, it's good for me to like, you know, sell another this zone, because I see the rejection over here, and I also see there's a 61.8% fib level as well. Okay, and I also see that my somehow RSI is already above 70%, so I take note of that. And then after that, price falling. If I were to short here, okay, price falling, either I still hold my second entry here, and I might close my first entry for sale for the break even or whatever here, then price continue to fall. Okay, so you need to have a backup plan for gold. For gold, you cannot, you know, put like 100 lot or 10 lot, because somehow if you just put like you sell at 2400, okay, like 24, and then gold is maybe from here they rise, okay, to 2402, okay, like another 20 pip, they go another 20 pip. If you were to put 10 lot, for example, they go 20 pip is already 2000, negative 2000. To me, if you can trade with 10 lot, you should have like at least like 2 lot, which is 5 order, or you can have like 1 lot with 10 order. Is up to you, because to me, I want to see, like I put the order here, if they go like, you know, go up another 100 pip or 200 pip, I still have another order. If price falling here, I will close like the below here, and then I hold the up here. Or if you just want to put 10 lot, also up to you, depend on your capital. And then you either price come, you can close partial, which is you close 5 lot, and then you can hold another 5 lot. It's up to you also. But to me, I like to have like small lot size, but there is a maximum with 10 lot that I can trade, something like that. Okay, any question for gold or how to take gold? There is no what to say, there is no advance, or there is no like, you know, the best indicator for the forex or trade gold. Basically, you just need to know how to look at the price action and the divergence, and you use the RSI and you use stochastic. Stochastic somehow I don't really use that much. I just want to see where the price is at, either hidden support or hidden resistance. But I heavily use RSI just to identify the divergence. Okay, if you trade with the divergence, you will see that gold has a lot of divergence when they approach the key level. Okay, there's a divergence on daily also. If the daily time frame you just hold, favor hold here, you can see the divergence here. Here, okay, daily time frame, one price go here, bearish divergence versus the RSI. You can see that price make a high here, indicator it make a lower high. There is a divergence here as well. Daily time frame is just hold, forever hold for divergence when it's happened in the lower in the daily time frame, because they were falling like crazy. Okay, and H4 also have a divergence versus the RSI, but some of the traders, they will use MACD to identify the divergence, so it's up to them. You can practice and you see which one is work well for you. Okay, I will find the divergence for you to see. You can see that one price come to the key level here, you'll see a lot of price action right here. and just a sideways here. You just identify that your key support here, right? You can see that the like, you know, sell. Okay, you see the price action based on H4 price action here. You look at your eyesight. Okay, you look at your eyesight here. What if we go to the M15? What we see over there? Okay, you see that it's a sideways in the M15. Okay, you will see the divergence starting to form here. Then you know that it's good. You can, you know, hold your buy position, or either you buy here, price keep coming down, but after that you will either switch to a higher time frame. You see your price, your divergence also here in H1. You can see that, and your price action right here, and then you hold. Okay, you hold the trade. But you can see very clearly that this is your divergence versus the eyesight, and then you just hold your price action right here. There is also sometimes divergence also can happen in M15 as well, if price approach the key level. I will see. This one we already done. Go to H1. Okay, sometime if you were to look at H1 or H4, if you don't see any divergence, you go to the lower time frame. Look every time frame. H1 you don't see, you go to M30, M5 or M15, you will see the divergence. Okay, this one I already said there's a divergence. Let me just mark out for you here. Okay, divergence which is already also happen at the key level. Okay, there's a divergence here. You can see that. Yeah, right, your divergence here. This is bullish divergence. Okay, what's about the bearish? You can see that bearish divergence here, bearish divergence here. Okay, you can see that one price come to like the key level, there's a lot of rejection right here. So when you draw the zone, this you're gonna be your zone, buy zone. This is gonna be your buy zone. So meaning that you draw the zone or the area from the body to the wick. Okay, this is your buy zone here, and then you can see price is bouncing from here, and now you can see here. Let's say what if we want to go to like lower time frame based on whatever we see here. They may have the divergence, or you can see the price action. Do you see price action here? This is your price action. Okay, you can see your price action and your price action here. M15 oversold price action, like rejection, the long wick. If you don't know price action, you see a lot of rejection, a lot of wick, you know that there's a key level already. You're gonna buy here, price go up to here, it's already 140 pip. Okay, which is somehow this your resistance level. Okay, this is your resistance level. You can see that you buy here, you aim for 100 pip, that's already TP. These are 140 pip, and then price kind of like, you know, go again and then falling. You have another price action here where your stop loss able to trade again. Definitely your stop loss just below this box only. Okay, and here your price action, you got confirmation. Another one is your bullish divergence is here, here, right? Price make a low indicator is make a higher low. Okay, you wait for the candle here to close. You second candle, you target 140 pip. Let's see whether price will go to this then hit your TP. You just, that is another 100 pip. Okay, so 200 pip already. Okay, what you see, this is already 200 pip just based on M15. You want to scalping 200 pip for gold. You just trade like with one lot is already 2,000 per day. Okay, simple strategy, but I tell you, it's very powerful. Okay, you don't need to like know so many strategy. Okay, you just, if you want to trade gold, you just have to look at gold, and then you should know their behavior. Okay, you should know their behavior, like you know how it's go. Come to this one, you can see that one price come to the wick here. Usually they will have another rejection, or you wait for price action, and then you can open like buy at second candle here. You can pull out your eyesight. Okay, you see that with the price already below 30, or you can see whether there is a divergence. Then you see, oh, there is a divergence here. I have a price action. Okay, I just put stop loss slightly below 23.50. Okay, and then you hold at least 50 pip. Okay, at least 50 pip in a M15, and then you already hit your TP. Okay, that's all guys. Any question, or you have any you have any pair you want me to look for you? I will look for you guys. Let me know. Any pair you want me to have a look? Okay, before I end the webinars, you want me to look for you any trade setup? We still have like 10 minutes or 5 to 10 minutes. You guys still with me? Anyone? Okay, now let's just do the trade setup for gold. Okay, before I end. Okay, again, gold, this is my sell zone, or my kind of like the resistance levels. This is my sell zone. Okay, so I just want to scalp, like I don't know whether price will fall, but I sell since like 23.90. Okay, it just come down. It's about 30 pip, but again, this is my kind of sell the first resistance or my sales, or my resistance. Okay, again, you want to look at market structure. Price still on like make a low high, still on downtrend. Okay, the target I think I'll just put here for my first support here. My second support, I just put this for my support level. That will be, let's say price break below my 100%, that will make go to like my extension right there. Okay, either I put here at the body, or put at the body, and either here I might adjust a little bit. So if price want to continue the downtrend, they you just go all the way and then continue to be like this, continue. But if they were to break above the like 24,000 there, okay, if they want to break, meaning that they will go like continue to go uptrend, because this is an ego low here, then they make kind of like they here, okay, they make a new low. Okay, either they go here from resistance, it become pullback support, and then continue to go uptrend. Okay, so just monitor this level here. Either I already short, but I have my stop loss, okay, in place. So when I go to the M15, to me, I'm short because I see the rejection here, so my sell just above, somehow above this week. Okay, because if really go above here, another sell zone that I kind of like looking at somewhere is this zone. just aim for at least 50 pip. This meaning that if they go above like my resistance level here, this is my another second sell zone, and then if hits my stop loss, then that's it. Okay, but this is what I can see in 15 I short based on what I can see here. Okay, you're welcome, AJ. Will this webinar be available? Yeah, they're gonna be available on YouTube. All the webinars you can just you know, watch whenever you're free. Okay, I don't think they will remove it. Okay guys, so this is my trade setup. Either you sell now, it's up to you. You just consider the money in your pocket. I already short. Okay, if price really go above here, I will have another entry right here. My TP, I aim for at least 50 pip or 30 pip. This is gonna be my TP, which is I short at 23.90 just now, and then price come to 23.85. That's about 50 pip. I will just close, and then they're gonna be end of my day, because I'm not going to trade during the New York section because I want to rest. Okay guys, thank you so much for your time. Okay, I will see you guys again in the next webinar. Take care, and take note that we are there's a high impact news for entire week. Okay, just take care and bye for now guys.